Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, we saw some escalation in selling pressure during the midpoint of the day, but as we went live, we have seen a little bit of a recovery, but in all certainty, we are going to end the day on a low note, on a weak note, and it does not look very pretty for the Wall Street.
Well, yes, but if you look at the recovery, it once again seems to indicate that there is support coming in at lower levels, and you're seeing some kind of a floor closer to 17,000 on the Nifty.
Yeah, support is coming in, but it's not really very, what do you call a very strong support, because even though Dow futures are up about 300 points, we are still around the near point of the day's day. And small cap and mid caps also have contributed to, the broad-based selling that we are seeing. Both the Nifty small cap 100 and the Nifty mid cap 100 are going in toe with the, benchmarks Nifty and Sensex in terms of losses.
I think there seems to be some kind of realization that ultimately, there's something called earnings which is linked to the stock price.
Well, whether this is just a temporary blip that small caps or mid caps are seeing, or whether this is a forebearer of more bad news, we'll see. But right now it's time to dive into some stocks, because there are some very interesting names that we have on our list.
Yes, I think
KPIT Tech.
Yes.
So yeah, KPIT Tech, basically, a stock that I actually wrote about a few days ago, Santo, and I'll tell you why. The company's stock surged today about 8.5%. Last I checked, and that surge came after a brilliant set of numbers for Q4. It beat estimates on net profit, revenue, and on margin side. So overall, good numbers, and the guidance also was pretty strong. The management indicated about 18 to 21% year-on-year growth for FY23, which is much higher than what some of the large cap peers have come out with. And here's the beauty why I wanted to mention KPIT Technologies. In the March quarter, retail investors were anyway accumulating a lot of the beaten down IT names. When FPIs and DIIs were both selling IT firms, retail investors were buying in and accumulating. But one stock really stood out, and that was KPIT Tech. In KPIT Tech, retail investors increased their stake by as much as 4 to 5% in just one quarter. So it goes to show that retail money is no longer dumb money in this market.
Okay, so here are the counter arguments. The overall outlook on the technology sector in general has changed. I mean, globally you're seeing anyway the difference is the change in sentiment is very obvious, but in India too, if you look at the trend over the last couple of weeks, ever since the big companies started announcing the numbers, you're seeing that there is a clear worsening of sentiment. That being the case, one would be better off not being caught out in mid cap. As for the guidance, clearly, the growth rates are anyway much higher for mid cap companies compared to the large cap. Obviously, the base effect is there in play. So I would say that, looking at expensive valuations, one should look for safer names within the sector.
Well, if expensive valuation guarantee you returns, then why not? Anyway, what do you have on your list?
So I think the next stock is Voltas, CJ.
Voltas. Okay. Sorry. My bad. I think I got caught up in your argument. Voltas. So yeah, the stock actually saw a pretty good rise in a weak market. Not a very great price performance. It was up about 0.5 to 1%. But where this rise is coming, or this confidence is coming from, clearly the hot summer that we all are experiencing is driving AC sales higher. There is an argument, of course, that input costs have also risen for AC makers, but given the strong volume surge that is coming in, June quarter numbers are going to be pretty good, and we could see a very breakout sort of an earnings from a lot of the AC makers in June quarter. So that is probably why, given the the relative optimism for earnings, Voltas did not fall as much as some of the other peers, and the rest of the market has fallen today.
Well, the AC story is as seasonal as the summer, I would say,
Okay.
And it's almost a given that in the June quarters, typically these companies tend to do well, barring a little difference here or there. But if you again look, the stock has been caught in a trading range for a while now. It's been unable to break past 1,300 rupees, and also there's a reason for that. Expensive valuations is one of the reasons why people are saying that investors looking to bet on the AC sector have other cheaper companies to go for. Plus the EMP segment, electromechanical project segment of Voltas, which contributes a significant chunk of revenues, that has been under pressure. They've been facing some kind of order execution problems according to a report by Money Control Pro. So these are some of the negatives for the stock, which is why you're seeing the stock price range bound.
Yeah, but I guess near-term triggers are at this point of time overcoming those, maybe some medium-term fears.
Yes, Mahanagar Gas is the third stock that we've been keeping an eye out on. The stock was among the gainers in today's lackluster market. Now, CJ, the argument is that we know gas prices are rising, but now I think at some point gas prices, high gas prices are a reality, and consumers will have to
Unfortunately,
put up
yes.
with that. Secondly, a big significant chunk of Mahanagar Gas product portfolio consists of CNG. Now, CNG, even though the prices have risen compared to petrol and diesel, they are still cheaper. So, any day demand for that would not be hurt even if prices go up. So, these are the two factors which are working in favor of Mahanagar Gas at this point in time.
Santo, okay, probably their volumes may not hurt as much because they are more direct to consumer businesses, but the margins are going to, because the natural product, the raw material for them, which is natural gas, that is soaring, and it's continued to, despite what we are 2 months into the war, the Russia-Ukraine war, and even today we saw a 24% jump in European natural gas prices. So that goes to show that when domestic prices are revised come September, you will see another spike. Maybe we will not see the near doubling of prices that we saw in March last month, but we will see a good 50 to 60% rise again in natural gas prices, and that is going to continue to weigh on margins. So I am not so sure how much benefit the company would be able to derive even if the volumes are sticky.
Closing argument, I think higher volumes will more than make up for that.
That said, one stock that is on my radar was Nippon Life. Stock fell like 9 pins. Stock was down about 4%, despite coming out with what a lot of people call a decent set of numbers from the company. The overall PAT and revenue growth was firm compared to some of the compared to sort of number the UTI AMC came out with. But investors at this point of time are not going to pay big money for single digit net profit growth. Yeah, revenue also of about 12% growth in revenue. Nobody is going to pay a big money for that sort of a growth number. At this point of time, investors want companies to show strong, aggressive growth, and that is not coming forth for Nippon Life at this point of time.
It's typical of the new age investor, focus on one quarter's number and then start beating the stock for it. Now CJ, MF, the very, the product that it sells, Nippon Asset Management Company itself is a long-term product. Mutual funds itself is a long-term product, and this is also a long-term story if you come to look at it. This morning again, you were making the point about, how a lot of interest is now shifting towards passive funds. Most of the investors are putting their money there. And if you look at passive funds, this is where Nippon is really the market leader. It has almost a 60% share in terms of ETF folios and accounts for almost 69% of the trading volumes in ETFs on the BSE and NSE put together. So I think these 2 points combined, I think give
besides EPFO, who is really buying ETF at this moment. So that's that. Anyway, what's the last stock on your counter?
Well, Kotak Bank, this stock was an
Kotak Bank?
Yes.
Wow, not heard of that name for a long time.
Yeah, but you saw that the stock was one of the outperformers in the Nifty Bank pack today. It did come under pressure towards the latter half of the session, but however, it's still been among the stocks which have fallen less. Now, Kotak Bank, clearly one of the best bets on the big growth expected in the financial services sector. Besides, there is a report by Ventura Securities which says that the loan book of Kotak Mahindra Bank is set to grow by at a compounded annual growth rate of 14% between now and FY24. And this apart, most importantly, Kotak Bank has been able to scale up its non-banking business, and that has provided a good cushion for Kotak Bank, even during the times of NPAs.
Well, all of that, good points. But Kotak Bank, despite being an underperformer in the market for the past 1 year, because the management was not so sure whether it should go aggressively, chase growth when COVID was still around, it's still one of the priciest banks out there. I mean, where its peer HDFC Bank has actually at least seen some, compression in price to book value on a 1 year forward basis. Kotak Bank is still quoting 6 to 7 times price to book value.
Those compression are 2 different reasons here. One is the uncertainty over the merger.
Okay, and I'll tell you the other thing. Kotak Bank is this entire story about Kotak has always been the retail story, right? High premium customers, retail lending, great business, all given. But the growth story now in the financial space, at least among the banks, is about corporate loans. That is what the market is, chasing after. That capex cycle will revive, private investment will revive, and we will see great corporate loan growth numbers coming out from. That is why SBIs of the world, Axis and ICICI were among the best performers last year. Now there, Kotak is lagging behind, and its retail heavy portfolio has become actually a source of pain for it. Why? Because investors at this point of time are not certain that the worst of the NPA crisis among retail borrowers is behind us. So that is something that will continue to keep Kotak Bank probably underperforming to the rest of the peers.
Well, that was about stocks. And CJ, in case we have missed anything, could you enlighten us on that?
Well, I don't know whether you missed it or not, but I want to enlighten you about something that is happening in the IPO mart. So we have seen the IPO mart, come back to its glory this week with 2 issues coming out. One of those issues is campus activewear. Of course, first day, first show, a bumper show. The IPO got fully subscribed, and the thing about campus is that the issue is being led by retail and HNI investors. Now, let's dial back 2 months ago when with the new norms coming out for HNI investors, wherein RBI has said that maybe NBFCs can't lend them more than 1 crore for a particular issue, or at one point of time everybody thought, oh, HNI investors' interest is going to wane in IPO mart, and therefore a lot of issues could struggle. But HNIs were among the driving force along with retail investors in campus's IPO so far, in the second day so far. Secondly, campus has been very strategic about its pricing. It's actually priced itself at a discount to its peers, even though it is actually part of a segment, the sports and athletic wear segment, which is a very high growth and high margin space.
In this market, I think it's a sensible thing to do, to price
Absolutely,
yourself at a discount.
and I think investors are rewarding them for the sensibility. And lastly, given the sort of response the first day of the IPO has seen, the grey market is buzzing. The unlisted market, or unlisted, I'm sorry, beg your pardon. The basically the grey market, or what do you call the informal market,
or
where
you will
see
market.
the unofficial market, where you see a lot of the IPOs change hand unofficially. There, the premium on the IPO has shot up to almost 30% already on second half of day 2, and analysts are expecting that premium could shoot to around 50% by the time the stock list in another 7 to 10 days time. So a bumper IPO listing is on the cards for campus.
And definitely that could do, if it lists well, probably it could do something in general for the IPO market, which has been going through a very lull phase.
Maybe LIC would benefit from it, who knows.
And most importantly, I think it's vital that HNIs make good money of it if they have to continue investing.
Because that tends we need to placate the fears of HNIs at this point of time.
Right. So CJ, what should investors be keeping an eye out for?
Well, earnings, at this point of time, this market is being dominated by, the earnings number that are coming through. So earnings will definitely be at the top of the list. Along with, we are going to have the expiry of the April derivative series, so that may add to some more volatility that we are seeing on the street.
What's your take on that, CJ? You've been saying you've been consistently batting for, bull scoring on the last day. That's tomorrow.
See, that is the general feel that has been in the market. So far, even despite the sort of crack we have seen today, the 17,000 odd level has continued to provide support to the market. So, and that was a very psychologically important support level for the market, and it has stuck around that part. So there is a chance that, given that we have not fallen more from where we began this morning, tomorrow, because it's the last day, it is possibility that we might see some short covering coming in again, the way we saw on Tuesday. With the Dow futures indicating a 300-point jump, in US markets later today, it's a very, very likely possibility.
I see it a little differently, CJ. You're seeing this is a market where neither the bulls nor the bears are winning. Every 2 days the bears seem to have the upper hand, and then suddenly bulls make a comeback. So I think probably you might see a jump tomorrow, but day after, again, it could be a classic case of 2 steps forward and 1 step behind.
Absolutely. Coming back to earnings, Axis Bank is going to come out with its earnings as well as Ambuja Cements. So those will be two key numbers to watch out for. Apart from that, later in the evening, we will see the US coming out with their Q1 GDP data. So
Just one point on the
yeah.
cement thing, Anil Singhvi of Digvijay Cement was on CNBC
Yeah.
TV18. He made a very interesting remark. He said that the surprise winner possibly could be someone who is not from the cement industry. Yes, any guesses?
But if he's going to invest in it, then probably.
Yeah, but
he will
interesting
be part of the
coming
cement
from
industry,
from Anil Singhvi.
Wow, I wonder who that white
player.
knight could be for wholesome India in that sense.
Most
That said, we should just take a status check on the market. It seems like we are going to close towards the lows of the day, Santo.
Yes, I think a sudden bout of selling pressure once again.
Yeah, so Sensex and Nifty are down 1% each. So just about 0.25% of the lows. Nifty Bank is down 1.1%. Although Nifty Bank had showed some signs of recovery earlier in the day with Kotak and HDFC turning into the green, but it seems like that has not lasted at all. And Nifty Midcap, yeah, again matching the losses on the large caps, down about 0.9%.
And the interesting thing is that after a long time, you're finally seeing some kind of selling pressure set into mid caps as well, because they have been holding on pretty well, mostly with supports from HNIs and retail investors.
This week has been pretty bad for mid cap and small caps, very strangely, and probably it makes me think that maybe somewhere down the line investors are thinking about growth now. It's just not an inflation story, it's also a growth story now. Whether the recovery in the economy will sustain at the level that a lot of the policymakers have been talking about, I think that has now come into question.
I think finally they're paying attention to what matters the most, that's earnings. Okay.
Absolutely.
With that, we'll let you get back to your trading terminal. There's about 10 minutes of trade still left. I hope you enjoyed watching this episode of Market with Santo and CJ. Do share your feedback with us in the comment sections below.
And yeah, please continue to watch moneycontrol.com and Moneycontrol app for any update on the market and the economy, as well as we will see you tomorrow morning at 9 a.m. Thank you
for watching.